Unfortunately, I think we do face a tricky situation where I think the Bank of England tried to push up sterling on the fear of a rate hike, but the reality is if they do raise rates too soon, we could face a bit of a downturn in the UK economy.
Miles, we are seeing a tightening of global monetary policy around the world. Do you think the ECB will follow this trend?
Yeah, no, I do think the ECB are in a tightening stage. I think maybe not as fast as people have anticipated, though. If you look at what the Eurozone's gone through in terms of the inflation dipping just before Jean-Claude Trichet raised rates, I think the Eurozone and in particular Mario Draghi is fearful of that happening again. So although we're not going to see any more loosening of monetary policy, I think any sort of tightening by the ECB will be gradual. The labour market still isn't at full capacity and inflation still remains below the 2% target rate. Subsequently, I think the ECB may disappoint at their next meeting. But that being said, over the next 6 to 12 months, assuming the Italian elections go well, we should see a tightening of monetary policy by the ECB in line with the Bank of England and the Federal Reserve.
Over in the States, Janet Yellen has urged policymakers about moving too gradually on monetary policy. What has urged this warning?
Yeah, so Janet Yellen's a bit fearful, I think, in terms of she's urging interest rates not to go up at too gradual a pace. I think purely and simply because at the moment the US labour market is close, if not at full capacity. When this starts to happen, as a result, wages will start creeping higher. And if they do, you start to see inflationary pressure creep into the US economy. If that happens, as it did in the 80s under Volcker, you could see inflation get out of hand. As a result, Janet Yellen doesn't want to be behind the curve and will be preempting interest rate rises, maybe more than the 25 basis points currently expected. I do think we see a rate rise in December, and I think next year could be quite interesting, especially with stock markets at record highs. We are seeing a tightening of monetary policy, and we could see some of those riskier assets start to give back some of their gains. That being said, obviously the effects of Hurricane Katrina remain to be seen. We did have the non-farm payroll data out on Friday, and the effects of which could be seen in the US interest rate decision later on in the year.
The Bank of England's Monetary Policy Committee will meet on the 2nd of November to discuss an interest rate hike. Is a rate hike inevitable? And what is taking so long and why is it stalling?
Yeah, so the Bank of England meeting on 2nd of November is going to be quite an interesting one. I think the law market is expecting a rate rise on the back of the hawkish minutes at the last Bank of England meeting. Unfortunately, I think we do face a tricky situation where I think the Bank of England tried to push up sterling on the fear of a rate hike, but the reality is if they do raise rates too soon, we could face a bit of a downturn in the UK economy. Lending is very high, there is a serious credit and housing market bubble potentially developing, and as a result, a rate rise in a period of downturn could be really detrimental. I think Mark Carney is looking for a positive outcome to come from Brexit, which should give the pound a boost, and as a result, decrease the amount of inflationary pressure we're seeing at the moment because of the weak sterling. On a trade-weighted basis, sterling still does remain significantly undervalued. That's more because of the uncertainty around Brexit. There does remain some headwinds, though. David Davis has announced he plans to resign after the Brexit deal has been announced. And as a result, there is almost a backup plan of no deal, which, if there is no deal in terms of Brexit, we're in a very tricky situation in terms of who do we trade with and how does the UK economy then continue after that.
Well, thank you so much, Miles, for joining us today, all the way from London, and speaking about monetary policy. It's been a pleasure.
Thanks, guys. Speak to you soon.
And thank you at home for watching. Don't forget to click back and like Dukascopy TV for more interviews like this. I'm Kaz Cahill. Goodbye for now.